Is silver set to crash? Are we seeing risk off moves coming in the market? And we're debuting version 5 of Momentum Timer Pro. All that and more on Sunday Night Charts. We take a look at charts to help you with trade week ahead. I'm your host, Steven Van Metre, and the moving averages. Colors on your screen. The red is 21-day, 50-day is in green, 100 days in blue, 200 days in tan. Price versus momentum. Price is a general direction. Prices are headed. Momentum is the rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where the sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time of trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500, symbol SPY. We see price and momentum unchanged. The only thing we do see is it's sliding just below its 50-day moving average. And is that finally a risk-off look for the SPY? Well, let's take a look at the charts, because in the past, no, it's been a buying opportunity. As you can see, it's been walking up its 50-day moving average. Anytime it gets close or just below it, that's been a huge indicator for the buyers to come in and buy this thing up. Now, it's coincidentally, except for this move down here back in May, it's coincided with some very clear support zones. You see there's a nice buy zone here, the top of it there, the bottom of it up here, and now we're right in the midst of it. So this is a very clear case that buyers just need to step in and do, well, what buyers have been doing, and that is buy the dip. Now, what do we see on the new version 5 Momentum Timer Pro? Let's take a look at it, because it is fairly in sync with what's going on here in the charts. You can see now we've added a 1 and 6 month trading range, and you can see all it's done is move down on Friday from a max position on the 1 month. It's still holding large positions on the 3 and 6 month scale, and that would make perfect sense if you're following a Momentum Timer Pro. And again, it is free right now, so it's really hard not to sign up. The link is in the description below, and you get a daily email 5 days a week with that. And we're adding more to it all the time. Again, it is free at the moment and will be at a reduced price for those who are part of the free beta test. All right, let's move on to the NASDAQ 100 QQQ. Unchanged here too on price and momentum, but it's just slipped just below its 21-day moving average. Is that too a risk-off move for the techs? Well, let's check this out and see what's up with the Qs. And no, this is not signaling any major move. In fact, it's got some latitude to come down if you wanted to see it tag its 50-day moving average. You want to see it touch the top of the supply zone and bring back buyers. And guess what? That would be okay. So you can see in the shorter move, would a move down into, say, 369 or that thereabouts be a negative for QQQ? Not at all. It'd be positive. What it's doing is just working out the sellers. So a nice clean still look on the bullish picture for tech stocks still in play. All right, let's move on to the small caps, which have been a sign of warning and continue to be a sign of warning for the big caps. And you've got to be watching the small caps. If you're not, you really should. Even if you don't trade them, you got to watch them. Look at price now flipping bearish back under the 100-day moving average. Although or bearish meaning the 100-day moving average trending lower. The above the 50-day moving average now is the only major change, because that's usually what you want to see. But remember, we talked about IWM and how all the moving averages are clustering together. And here you can see that it's a small move could take it above or below all of them. So they're all clustered together. Even the 200-day is coming up. And what do we see? It rallied from a buy zone all the way up into a sell zone. And we'll say the ball is in the seller's court right now to take this lower if they want. The volume profile line over the last 6 months, where most of the shares have been traded, has been consistent. This, yes, sellers are indeed there. How about let's take a quick look at what Momentum Timer Pro thinks of IWM. And my guess is it's pretty much in line with not taking a lot of risks there. Here's IWM on a 1 month size. It's got a mid-sized position, no position on the 3 month window, and a small position on a 6-month window. So that is validating that this longer term chart we're seeing, which is a topping pattern in IWM, and you can see it very clearly there. There's just been no return for small caps unless you happen to buy at these low points. There's just been no return there for months. All right, let's go on to what do we have next to take a look at, and that is transportation sector. Now remember, transportation is real interesting because it too tends to be a leading indicator of the big indices. So the SPY and the QQQ, if you see transportation or IYT heading lower, there's your another red flag. Look, price momentum bearish still across the board, still below all the moving averages. Now 3 and 6 month momentum are turning negative and falling. And so yes, that is raising some red flags. Let's take a look at IYT and see what we've got going on there. And that volume profile line is starting to get very clear that this is where the sellers are at. And if we zoom out a little bit to a 1-year chart, you can see that this is what a topping pattern looks like. Now we're below the 200-day moving average, and that will bring in some program sellers. There's plenty of people, plenty of programs out there that will sell on a move below the 200-day moving average. So what is that telling you from a volume support level? The next major zone is 221 is what that is telling you. All right, so let's move on from that bearish picture in IYT on to, we're not going to look at every signal on the MTP because you'll get, if you sign up or you're signed up, you'll get a copy on Monday morning. So how in the energy sector, perhaps some bullish, some change now from the data here. We see prices flip bullish on the 21-day moving average as it turns higher. It's back above its 9, 21, and 50-day moving averages. 1 month momentum is positive rising, 3 and 6 month negative rising. So those are all good early indicators. Let's see what it says about what our charts say about XLE and that volume profile line. That right now you can flip a coin because you can see the buyers and sellers are so closely matched. 50 is where the sellers are at, and you go right below, the buyers are right there around 47. So the battlefield is very concentrated. They're duking it out back and forth. And, the moment you think the volume profile line is telling you that, this is a selling, then you turn around the next weekend, it's buying. And zoom out on the 1-year chart. And what do we see? Again, what appears to be a topping pattern, a left shoulder ahead, potential right shoulder. Again, these can be invalidated. If it was to be validated, we would want to see price come down into the $44 range. If this is going to be invalidated, I would think this next week, you're going to see signs of that as the volume profile line holds, indicating buyers, and that would take price up to 52. So I'll remain inconclusive on the energy sector, but let's take a look at crude and see if we get any better picture on the crude oil chart. And crude oil is telling you that the energy stocks should head higher as crude is now back up into the low $70 range. So if crude is an indicator of where this is going, then it's telling you that yes, indeed, energy is where that volume profile line is on XLE is indeed buyers. All right, let's take a look at financials, which are just heavily being bought through corporate share buybacks as the banks were freed up and allowed to take some of their profits and buy a massive amount of shares back. The only change here is 1 month momentum is now negative and falling. Let's take a look and see what's going on with financials. And all they're doing is just coming back into the supply zone. And you can see very clearly where the volume is. In fact, we can probably move this line up a little bit around this tighter zone, and now it starts to look a little bit prettier, and you see there's a supply zone right below. Now, how would you draw that? You take a line here, make a copy of it, and move it down. You see, you kind of want to hit the top end of where that volume is showing, and then duplicate it again, and you've got another supply zone right there. So all it's doing is consolidating here in this supply zone, which has been where sellers are at. Perhaps this is where CEOs and other executives at the banks and board members are selling, but the buy zone's right below it. So very tight trading range on XLF, nothing there to even remotely worry about. Let's go on to XLI Industrials. Again, This is flagging some concern. Price going bearish across the board, momentum bearish across the board, under all the moving averages, 1 and 3 month momentum, negative and falling. Let's see what the charts have to say about that. All right, let's head over to XLI. And there it is. And woof, look at that. You can see the volume profile line very clearly telling you where the sellers are at. Now zoom out a little bit and see that, yes, this is getting to a danger point. You can see buyers have came in here around $99 a share on XLI and bought it up, and here it is. So ball's in the buyer's court. If not, then you're coming down. See, there's a little supply zone here. This is where the last zone of buyers were at. So then you'd look at a move down to say 95, 96. But ball's now in the buyer's court. Will they advance or will they take a knee? We'll soon find out. Let's move on to the utility sector, which was just boom, 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 and then looks like it's gone bust, bust, bust. 21-day moving average turning bearish as it turns lower. Momentum slowing down, turning bearish. Price now below the 50-day moving average. 1 month momentum negative and falling. Early signs for the utility sector that things are perhaps not that great, but let's find out what the chart says. And you can look at that, just hammering down. Let's zoom out to the 1 year. Let's zoom out to the 2 year. Where's that prior top? So it came up near that prior top. Indeed, we found sellers there, and now it's coming down. So where should this go? Probably coming to a halt pretty soon, because you can see this little band of where buyers have been at. So I wouldn't be surprised if utility sector comes down a little bit more before it finds out if there's buyers. Otherwise, you can see the volume profile line has been very strong, $64 a share. That's where the major buyers have been at over the last couple of years, and they remain strong there between 64 and 65. So if you're in this, not a lot to worry about yet. You've got some space to hang on there. How about gold miners? We've been bearish on gold miners for a long time as they put in a mega topping pattern, and price still bearish, momentum bearish, except for the 21-day moving average, which is still showing some increases below all the key moving averages. 1 month momentum now turning negative and falling. 12-month momentum negative, also and falling, and just what is looking like a really ugly chart. And yet the sentiment on gold miners is super bullish. Whenever I talk about it, people say, no, it's real bullish. And here you can see it's breaking down. GDX previously would find buyers at 30.53 at the lowest, and now it's breaking down below. And what is that telling you? That the next direction for GDX is down here in the high 28. Buyers really, this is all about the buyers needing to get on the bandwagon here. How about GDXJ? Similar picture here. It's looking like it's going to break down into this supply zone. It's at the top of it now, but you can see it came in here just a month ago. At this time, found buyers. Will find it again. Otherwise, this is exactly what a topping pattern looks like, and is extremely dangerous. Should be taken as caution, because when you see liquidity drain, you see gold miners fall, and then of course you see the broad market come with it. And you can see over the last 6 months, there's nothing even to see. How about the 1 year chart? There's just nothing there. It's just saying, look, this is ugly. And let's take a look. We know the old version of MTP, which the formula underneath didn't change. Just add the 1 and 6 month signals. How about GDX, GDXJ? No positions except GDX on a 6 month window as a minimum. I imagine that's going to go away, well, pretty soon. It would be my hunch. All right, let's move on to emerging markets, see if EEM is giving the miners any hope. And what do we see here? Nothing on price and momentum's changed. Still bearish across 50 and 100-day moving averages. Now below all the key moving averages. 3 month momentum's negative falling. 6 months still negative and falling. This is not the chart type of data you want to see from a momentum perspective. Let's look at EEM. And here you go. There is your volume profile line. Very clear indicator that sellers are selling every rise in price. Buyers remain bullish on it, particularly U.S. investors coming in, moving up during the day. There you see it rolling over. There, the next location of support, you can barely see this light purple line at 49.81. That's where it's got to hold. Otherwise, you're looking at a move down into the mid 40s. So emerging markets not giving gold bulls any hope at all. Let's move on to high yield bonds. And, it's interesting. People love high yield bonds. There's a ton of high yield bond issuance. And to me, there's just a tremendous amount of risk here if you're not hedging this risk in some way. Momentum flipping bullish on the 50-day moving average, now above all the moving averages. I should say I'm surprised, but people have bought in pretty heavily to the reflation theme. And well, if you're buying into it, then and you're in the bond market, then HYG is where you want to be. And you can see the volume profile lines telling you. And this is why companies are issuing so much high yield debt, because people are buying it. There's this insatiable appetite. It's almost weird to think the Fed is actually selling off some of its bond portfolio. And they were worried at one point that there wasn't people in the high yield space. Remember, this is why the Fed bought corporate bonds. They were worried there weren't buyers in the high yield space. And what is it telling you? There's a ton of them, and they're buying everything. So yeah, high yield bonds, definitely still the case for being bullish. Absolutely there. All right, let's go on to TLT. Of course, we know Bond King loves treasuries. Big risk off move comes. Markets go to the bond market. Price bullish across the board. Momentum flipping bearish on the 21-day. Still below the 9 and 21-day moving averages. Above the 50-day now. That's important. 9 and 12-month momentum finally turning negative and rising. Just inevitable as things rotate lower on the longer term scale. So as the back end of the scale comes down, we would see that. Let's go to TLT. And what do we see there? Sitting right on its 6-month volume profile line. Very clear that buyers are below that. We see very clear sellers are right above it at 151, and you can zoom in. When you turn volume profile on your charts, look at this. You can see, boom, right on 90-day profile right there. How about 30-day? Right above it. How about even, let's see, where the 10-day, and we see right above it. So very clearly, every move lower in price on TLT is bought, and you can see it ramps up, and then and you see it breaks that channel, and sellers come in and hammer it down. Then it goes up, sellers bring it down, goes up, sellers are trying to bring it down, but this time the buyers are holding a little bit stronger. So we'll see if they hold this into next week. If they can, then look for 151 is where the sellers are very clearly at. So they're right there, 150 to 151. But again, the sellers are fighting what? Yeah, the Fed. And regulation and foreign banks and the standing repo facilities. How about gold? A lot of people bullish on gold. Maybe they shouldn't be after you look at the picture on the miners. 50-day moving average price turning bearish as it turns lower, still below all the key moving averages. Longer term metric, 12-month went negative and fallen. That's not the big deal. There's some hope. You see some above the 21-day, 21 days turning higher still. Momentum still higher. The 1 and 6 month high are rising, 3-month negative and rising. So there's some hope. Let's see if the charts show any hope, and not so much. You can see, as we've talked about before, every time it gets up to this 1800, 1820 range, and everyone gets super bullish, okay, this is a big breakout, and sellers come in and slam it down. And what does that mean? It means that right now, the next direction for gold, unless we find buyers here at 1753, which it has in the past, if it finds buyers here, it'll take it back up try to take it back up into this low 1800s. Failure here takes it down to 1687, and 1687 is a break, and that is the big top of this gold mountain up here, and then all bets are off where gold goes. The next move then would be down here into the $1,600 range, and a lot of people I know super bullish on it, don't want to see it. But the charts are telling you there's sellers there all over the place. How about silver? Is silver going to tell gold the party's over? Well, chart on silver is not pretty, my friends. Silver looks like it's going to crash. How about price? 21-day moving average flipping bearish, and one momentum is positive and rising, otherwise unchanged from our normal screens, below all the key moving averages. How about silver on a chart? Let's take a look, and this thing is, as bad as it can get. Here you can see it went up. So it kind of looks like the Russell 2000 chart. Went sideways for a while and is now breaking down, telling you the price for silver should be around $18, is where there's this big gap here in price that will get filled on the way down. So what's happened here is you had these supply zones. You had buying zone in here, selling zone in here. It broke below that buying zone and it came back up into the buying zone. What happened, I want you to understand this, is previous buyers started selling and now they're driving price down, and those prior buyers are sending price lower. If it doesn't firm up here, the next direction is indeed 18. That tells you where gold is headed, tells you why miners are moving down, and that is the end of the reflation story. So gold or silver, gold miners all looking to crash. How about the dollar, almighty dollar? Is it getting ready to take off? Well, let's take a look. Price still remains bearish on the 21-day, and momentum on the 21-day still slowing, telling us no signal on the shorter term. Longer term signals look good. Above all its key moving averages, 1 and 12-month momentum now negative and rising. So you have a nice clear picture here that tells you that the dollar should be moving higher. And what do you see here? It's at 93.25. If it breaks out over 94, there's your breakout point. All bets are off for the market. Let's look at UUP, and we can see it's now, but getting above its volume profile line on the 1-year chart. Remember, the same thing happened with TLT. And where bonds go, the dollar will follow. Here you can see on the 6-month chart of UUP, every time it comes down, it is holding and going up. And that indeed is telling you risk off move as people fly to the safety of the dollar. Anyways, we'll see you on Monday for the show. Thanks for watching. Bye now. The content of this video is provided as educational information only. It's not intended to provide investment or advice. It is not to be construed as recognition or solicitation by either selling security, financial instrument, or to participate in a particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity and opinions expressed in this video that do not reflect the view of Atlas Financial Advisors Inc. or Steven Van Metre Financial.